Hello, good people. Welcome back to Money Conversations with Magical. In my previous videos, I started talking about asset classes and I spoke about cash and cash equivalents. I spoke about the fixed income assets, which are the bonds. So today I'd like to talk about the third asset class under the traditional class, which is the equities. Equities are simply stocks, or what people refer to as shares. In bonds, we said that when you get involved in bonds, you become a lender. Now, in equities or stocks, think ownership. When you buy a stock, you become a owner. You own part of that company that you've invested in. So in essence, it means that when the company makes profits, it shares with you those profits in terms of dividends. You can also benefit through capital gain, meaning that if you bought a piece of share at 10 shillings and you sell at 20 shillings, that's capital gain. You've made a profit. How do you then get involved in the equities? You can get involved through buying shares through the Nairobi Stock Exchange. So companies that are listed in the Nairobi Stock Exchange, for instance, companies in the banking sector, in the telecommunication sector, in the agricultural sector, pharmaceutical sector, and any other sector, including energy and all the other sectors that we have. The other way you can get involved is through the global space. Companies that are listed in the New York Stock Exchange, for instance, London Stock Exchange, Tokyo Stock Exchange, all these are avenues for investing in stocks. The other way you can invest in stocks is through a new platform. It's called ESOP. ESOP stands for Employee Share Ownership Plan. This is a program that allows employees to acquire ownership, interest, or shares in the company they work for. So that's also an avenue to participate in equities. The other way is that instead of you going directly to buy shares from a certain company, you can buy or participate in shares through equity fund. Fund managers offer one of the funds under the collective investment scheme called equity fund. This is a fund that allows your fund manager to buy for you stocks from various companies that are listed in the stock exchanges they are investing in. And as we've been discussing, the main idea behind discussing these asset classes is to understand their objectives. So the objective for the equities is largely growth on your portfolio. Because of the effect of compounding, you are able to get an exponential growth on your money. The other thing the equity fund helps you with is to beat inflation, because the stock market will always outpace inflation. For instance, if the current inflation rate is at 6 to 7%, you'll find the stocks are always operating way above that. So you're able to hedge against inflation. But as you invest in stocks, you just have to be careful about a few things, that you have to think long term. It's not investment for short-term goals. You have to think long term and have a bigger time horizon. You have to understand that there are steep short-term fluctuations that could affect your returns, but in the long run, your money will always have a good growth in the long term. The other thing is that you have to understand that high risk, high returns. So in as much as the returns might be magnified, the risks might also be magnified. So the returns can be high and the loss can also be high. But did you know that I want to read for you something. That's a recent development, so that you see if you can capitalize in investing in the stocks. I'll read. The Nairobi Securities Exchange, or the NSE, All Share Index NASI, emerged as the fourth best performing equity index globally for the first half of 2026, delivering a 26.7 return between January and June 2026. The global performance ranking for half 1 2026 placed Kenya behind Ghana, Poland, and Greece. So you can see there's a great potential for the stocks, the Nairobi Stock Exchange. And so that's an avenue that if you have money, you can put in there, and you have a long-term horizon, and you understand the fundamentals of investing in the stock market, you can do your research, do your due diligence, and invest in the stocks. But if you can't go in as an individual, I would recommend that you go in through the equity fund. I have done a video on the equity funds, and you can have a look at that. Thank you.